Common tax savings for business owners, part 6, employing kids. Now this works, but there are certain rules to it, so I'd always say to check the rules. I'm no expert on employment law, but your kids have got to be a certain age, and if they're in full-time education, there's only so many hours a week they can work. Also, you've got to factor in sort of things like equal pay rights. You can't just employ your kid who's doing a basic role on more than one of your senior leaders, for example. So there are some nuances with that, but I do see it working quite well, and often businesses will pay their kids, insisting they put that money away, which they can put away for university. Obviously, kids typically don't have any other income, so they've got their personal allowance to utilise, and this is where it works well. So the kids wouldn't pay any tax on the income they receive, and it would be a cost to the business, which would reduce the corporation tax payable. As well, what it means is, typically in most families, you might be giving your kids some money anyway, or you might be putting some money into a savings account for them. And if you are doing that, you're doing that on after-taxed income. So you go from doing that yourself, incurring tax, national insurance, dividend tax on it, to incurring no tax on it because your kids getting paid, they're not paying any tax, and they can save it themselves. The thing is, it is their money though, so you've got to trust them. You've got to trust them with it, basically. It's a caveat I would always say, because it's not something you can do and then the pay goes to you. The pay must go to them, and it is their money.